Hi, today we're going over our custom calculator. This is a great calculator that will help you budget and also help you understand all of the costs that are involved. Now, just a disclaimer, these are only estimates. I am not an accountant or a lender, so these are just some calculations and formulas that we've put together to help our clients. But always check with your accountant and your lender for the final numbers. So let's get started. So right now we have it in an Excel spreadsheet, and you're going to see that we have a purchase price and an accepted price. So let's pull up a sample property. Let me pull one up here. So I've pulled up a sample property that we can take a look at. This is a townhouse, so we can also do one with a condo. But let's get started on this one. So the list price for this property is $475, and let's say that they accepted $470. Actually, I'm going to do $450 just to keep numbers easy. So the total down payment, now you have an option to put different down payments, obviously. Whatever you qualified for, whether that's 3.5% or 5%, 10%, or 20%, you would put that information here. Now, for this one, I'm just going to put 10%. Again, you can come in here and put in the percentage. You know how much you're going to be putting down, as well as your interest rate. So the pre-qualification letter that you have should have all of this information in there for you. So for the interest rate, I'm going to put 3.5%, or actually we'll just play it around. We'll put 4%. And the PMI, or the MIP estimate, now that is private mortgage insurance and mortgage insurance premium. Depending on the type of mortgage you have, you may be expected to pay MIP or PMI. Now there are lots of other lenders that are offering PMI and MIP kind of built in, so you'd pay a little bit of a higher interest rate, but that estimate, that payment would be built right in. So I'm going to estimate that at 1% for now, and you can see the impact it has on the budget. So if you can figure out a way to get rid of that, that's always preferred, but if not, it's going to be there. So I can leave that here and then take it off at the end just so you guys can see the impact it has. HOA monthly fees. So we look at the HOA fee and we see that it's $100 per month. So I'm going to put $100. And this is not a condo, so I'm going to take the $100 off. Property taxes. So we want to look at the taxes, and you want to make sure that you have the latest tax bill. So this is 2015, so it's as current as it's going to get. Total taxes is $5,015. And then the homeowners or the hazard insurance. Now, depending on obviously the type of home, the size of home, this is going to vary. But if you know what it's going to be, you can ask your insurance agent to give you an estimate. Whether that's $50 a month or $100 a month, you can actually put that in here. I'm going to leave that at 0 because I don't know what that fee would be at this point. So I'm not even going to touch it. If you like to have budgets, and a lot of our clients really love this for the budgeting purposes, you can add your utilities here. You can ask the seller for estimated utilities. You can say, okay, I know I have internet and electrical, and it's going to be at least $200. I have daycare costs, or I have fitness costs, whatever it is. You can actually put and just keep adding on fields here, just so you can have a budget that you can work with. Especially if you're in a tight budget, you want to make sure that you have everything covered. So that's just the basics of it, just the gist of it. So you can see how even a little bit of an interest rate will make a difference on your bottom line. So you can see here at 3%, 3.25%, we're looking at $2,600. If we go to 2, $2,788. So you can play around with this calculator. Now, what's really great about this calculator is all the things that we've kind of built into here. And this is because my clients have been asking for things. And so when I first moved here, I couldn't get anyone to really explain to me the tax benefits of ownership versus renting with the income level that I was making. So I decided, after I figured it out, to create something that will make it easy for you guys. On the next tab, we have the amortization schedule. So you're going to see that if we're looking at a total finance of $405,000, you're going to see the $405,000 here under the loan amount. And then the annual interest rate, which is coming from here. So once you have those in there, you don't have to change anything on any of these. It'll automatically circle through to all the tabs. And then you're going to see it's a 30-year loan, the start date on the loan, so you can change this one. Obviously, that's not current. So now we're going to put in 2016. And you can see the monthly payment. We can check that monthly payment right here and right there. So this is an amortization schedule, which means that you're going to be paying monthly mortgage and where that mortgage is going. So your monthly payment includes principal and interest. So you're going to be able to see the principal here and then the interest. And you're going to notice that at first you're going to be paying all of the interest up front and a little bit of the principal. And as you scroll down, you're going to see that that's going to change. Obviously, as you make payments, the bank gets paid for taking the risk on giving you the loan. So that's why the interest rates are paid up front. But then you're going to notice that I have your federal tax rate and your state tax rate. Now, those are where we're going to be calculating the tax benefits. So I have the 2015 and 2016 tax brackets right here. So you can see if you're making a specific amount of money, and if you're married or single or head of household, where you're going to fall in with those tax brackets. So I just picked 25 as a sample on this one, but you can check that tab and see where you are, and you would just come in here and enter that in. The VA tax rate is 5%, so that doesn't change. So you're going to see that at the end of the year, you're going to have a yearly tax deduction of $4,017.55. So this gives you the yearly tax deduction benefits that you're going to be getting. So this is the total interest paid, and then you get a percentage of that deducted. And you're going to notice as you scroll down, obviously that's going to get less and less because you're paying less interest and therefore less deductions. And then also your state tax benefits as well. So that comes into place when we're looking at a comparison. So let's say that you're looking to compare buying this property versus paying $1,600 in rent. So this again is assuming that your rent is not going to go up for 10 years, which is probably a rare occurrence. So total mortgage payments. So again, these are the total mortgage, and if you scroll back, you're going to see the $2,788, which includes all the PMI, MIP, and HOA fees in there, because I wanted to make sure when we do the comparison, you're not paying anything else. The HOA fees and everything else is actually paid for by your rent. So we're going to look at $2,788, your tax return benefits. Now, how we calculated this is we looked at your yearly tax returns, right? Tax deductions, and we divided that up by 12. So yearly, you're going to be getting basically this per month. So the first year, you're going to be getting $334.80 of tax benefits. So the actual cost of your mortgage payment is $24.57, and then the difference, the rent versus buying. So if you were renting at $1,600, now you're going to be paying $24.54. There's an $850 difference. So what does that really mean? So you can look at the things that we don't really consider about, and this doesn't really include the appreciation in there, so you can add 1 to 3% appreciation as well to the value of the property. But you're going to start building equity. So the first year, you're going to be building $7,132, and you can see if you decide to stay there for a few years, here's after 5 years, you're going to have almost $40,000 in there, and then after 10 years. So this gives you a pretty good idea, and this is probably not the best comparison. This would probably be better if you were paying $2,500 or $2,200 in rent, and then you can see a better comparison. On the next tab, I have the 30-year payment rates. So this is just a quick glance at how interest rates will impact the monthly payments. That's also a great place where you look at HOA payments and the condo fees and any other fees that you may be paying and what it could mean as far as the purchase power. So oftentimes I have clients asking me, is condo better than a townhouse, or is it better to buy a single family home? That is completely a choice of lifestyle. For a condo, you're paying for that maintenance-free lifestyle. The townhouse has a little bit more. Obviously, you get a little bit more yard, but a condo, you don't have to pretty much do anything. You own from walls in, or paint in, we like to call. And if you'd like to purchase a single family home, maybe you have kids or animals, or you just like to have a property, large property, then it's pretty much you doing all the maintenance. So the costs are going to be different there as well. So it's really a lifestyle choice. You're going to be paying, whether it's to maintain your home or on a condo fee. Of course, there are differences. Some condos do charge a lot. And again, that's relative to what you need. So if you don't ever use the pool or the amenities, maybe that's not the best choice for you to spend $400 or $500 a month, where you can get something, a bigger house or a townhouse. Again, that is a personal choice, and we actually have a seller profile and a buyer profile where we go through all of that and really understand where you are and look at this kind of information as far as financing, lifestyle, your future plans, and then help you decide. I have another tab in here with the extra payments. So it shows you the impact if you make an extra $100 payments, and you can come in here and put in $200 or $50, and then you can see the impact it has. Obviously, it's great if you can make payments, and you just have to make sure that you write in there that it's applied towards principal and not the interest, to make sure it goes there. And then I have some information in there about the loan process, the credit bureaus, and stuff like that. So obviously, we put that information in there. If your credit needs some repair or fix-ups, and you need to kind of handle that, you can see that if you're at a high rate right now, maybe at 4.5%, once you clear your credit, it could be at 4%, and it could have significant payment deductions for you. So I hope this was beneficial. If you guys have any questions, you can always text me or catch me online. If you guys like this calculator, the only thing that I ask for is please make a comment and let other people know how well it's working. And if you want any additional tabs added, this is how we've actually created this calculator. It is due to the fact that our clients were always asking this kind of information from us, and I wanted to compile something and give it to them that brings value. So if you like it, please leave a comment and make it a great day.